My young apprentice of capital, you live in an age where the movements of financial celebrities, those rare individuals whose names shape markets, whose words shift billions, whose portfolios serve as compasses for entire industries, are watched with an obsession once reserved for kings and prophets. Yet what most fail to realize is that these titans are not merely investing in assets, they are investing in signals, in cycles, in the embryonic forms of future wealth. Their portfolios are maps of what is coming, not what already is. And if you learn to read these maps with the eyes of a seasoned elder rather than a hopeful novice, you will glimpse where the financial rivers of tomorrow are beginning to carve their paths. Today's financial celebrities operate in a world defined by instability, innovation, and acceleration. The old certainties, predictable bonds, steady equities, simple commodities, are no longer enough to satisfy minds trained to detect seismic shifts beneath the soil. Thus, they cast their nets into four great arenas: technological disruption, hard asset resilience, frontier finance, and human capital expansion. Within these four realms lies the beating heart of what they are investing in right now. At this very moment, when governments wrestle with inflation, markets tremble between greed and fear, and technology advances with the ferocity of wildfire, the first arena dominating the attention of financial celebrities is artificial intelligence and automation, the force that now reshapes industries faster than regulation can keep pace. They are not merely buying AI stocks, they are investing in entire ecosystems, semiconductors that power machine learning, cloud infrastructure, supporting massive model training, cybersecurity systems guarding digital assets, and robotics companies automating the physical world. They understand that AI is not a trend, but a tectonic shift, a new electricity. And while the masses chase headlines about chatbots, these titans accumulate positions in companies that produce the picks and shovels of the AI age: data centers, advanced chips, energy providers, quantum research laboratories. To them, AI is not a gamble, it is destiny. The second arena is energy transformation, a landscape undergoing a metamorphosis unlike any in history. Financial celebrities are investing not only in renewable energy, but in the infrastructure required to sustain it. Rare minerals for battery technology, grid modernization systems, nuclear startups deploying small, modular reactors, and carbon reduction platforms aligned with global policy trends. They know that as nations struggle to transition away from fossil fuels, trillions will flow into the companies that solve the bottlenecks: storage, transmission, materials, and efficiency. They invest where necessity collides with inevitability. The third arena is healthspan and biotech revolution. For what good is wealth if the hands that hold it wither early? These investors pour capital into genetic editing, longevity clinics, precision medicine, neural interfaces, and programmable biology. They understand that breakthroughs in aging reversal or cellular repair will produce fortunes beyond imagination. They also invest in biotech infrastructure, reagent manufacturers, AI-driven drug discovery platforms, and medical data networks that provide the raw material for scientific progress. In the shadows of laboratories, they see the next empires rising. Yet even as they embrace the digital and biological future, financial celebrities are returning with renewed intensity to something ancient and eternal: hard assets. In times of inflation, geopolitical instability, and currency debasement, they seek refuge in real estate, precious metals, farmland, water rights, and strategic commodities, but do not imagine them buying randomly. They choose, with surgical intent, logistics hubs supporting e-commerce, farmland with regenerative potential, rare earth mining operations, timberland used to hedge carbon markets. Some quietly accumulate gold. Others accumulate Bitcoin as a digital counterpart to gold, treating it as a geopolitical hedge rather than a speculative toy. What you must understand is this: when the wealthy buy hard assets, they are preparing for storms the public has not yet felt. The fourth arena may surprise you, for it is not a category of assets, but a category of problems. The wisest investors seek profit not in fads, but in humanity's greatest challenges: housing shortages, food insecurity, global aging, mental health crises, education gaps, supply chain fragility. They invest in companies solving these problems because necessity creates markets more enduring than hype. Platforms that reinvent learning, companies that modernize healthcare delivery, technologies that secure food systems. These attract capital from investors who see beyond headlines into the struggles shaping civilization itself. But the most profound shift happening right now, one the inexperienced scarcely notice, is the movement of financial celebrities into private markets. They understand that public markets are merely the tip of the iceberg. True innovation, true exponential growth, happens in private equity, venture capital, and pre-IPO ventures shielded from public scrutiny. They invest in AI startups before announcements, biotech firms before FDA approval, materials companies before global contracts, crypto infrastructure before market cycles turn. They know that by the time retail investors hear the news, the harvest has already been gathered. Thus, they plant seeds where few have access. Another rising fascination among financial celebrities is decentralized finance infrastructure. Not speculative tokens, but the rails upon which future digital assets will travel. They invest in custody solutions, scalable blockchains, institutional-grade liquidity networks, tokenized real estate platforms, and cross-border settlement systems. They see a world emerging where finance is borderless, programmable, and instantaneous. To them, crypto is no longer rebellion. It is infrastructure. Yet perhaps the most overlooked arena is the rise of intellectual property monetization. Financial celebrities are buying stakes in music catalogs, film rights, influencer brands, and digital storytelling universes. They understand that attention has become a currency, and that owning the rights behind cultural influence yields streams of income as predictable as rent. But what ties all these investments together? What unseen thread unites AI, energy, biotech, hard assets, DeFi, and private markets? It is the realization that the future will belong to those who understand convergence, the merging of technologies, industries, and human needs into new forms of value. The world is no longer segmented into neat categories. AI shapes biotech. Biotech shapes food. Food shapes climate. Climate shapes energy. Energy shapes geopolitics. And financial celebrities invest at the intersections, the crossroads where powerful forces collide. As we approach the cliff's edge of this exploration, young one, a final insight emerges. Financial celebrities invest not where the spotlight shines, but where the shadows thicken. They move capital into sectors the public finds boring, complex, or frightening. They invest in infrastructure when others chase entertainment. They buy undervalued industries when the crowd flees. They understand that wealth grows in silence long before it explodes in spectacle. And in the second half of this journey, I will reveal how these investment themes intertwine to form the strategic frameworks these titans rely upon, how they evaluate timing, manage risk, and anticipate global shifts that reshape industries, redirect capital, and redefine what it means to build wealth in an age where the world moves not in steps, but in leaps. And it is in understanding these silent tectonic movements that financial celebrities secure their advantage long before the public senses even the faintest tremor. Now, my young apprentice, let us walk deeper into the strategic mind of these titans, so that you may understand not only what they invest in, but how they weave those investments into fortresses capable of withstanding storms, cycles, and the unpredictable tides of global transformation. The first layer of their strategy is interconnected positioning. Financial celebrities never see an investment as isolated. When they buy into AI, they simultaneously evaluate the energy sources needed to fuel that AI, the data infrastructure required to store its output, the cybersecurity necessary to protect it, and the regulatory environment that will shape its evolution. A single decision becomes an ecosystem of decisions. This is why their portfolios appear diversified, yet internally they form a coherent narrative, each asset reinforcing another. In their eyes, a portfolio is not a basket. It is an organism. The second layer is timing through cycles, the ancient rhythm that novice investors continually underestimate. These titans track liquidity cycles, credit cycles, innovation cycles, demographic shifts, and geopolitical pendulums. They know that AI adoption accelerates in recessionary periods when companies seek automation to reduce costs. They know that precious metals rise when trust in institutions falls. They know that biotech innovation surges after regulatory modernization. They understand crypto's rhythm of halving cycles, liquidity injections, and cultural momentum. Their timing is not luck, it is pattern recognition matured over decades of observation. The third layer is risk barbell structuring, a strategy borrowed from the wisdom of mathematicians and battle-tested by the most resilient investors. Financial celebrities place a portion of capital in ultra-safe assets, treasuries, core real estate, essential commodities, while simultaneously placing another portion in high-upside, asymmetric opportunities, early-stage AI, frontier biotech, emerging crypto infrastructure. The middle ground, the realm of mediocre return and mediocre risk, they avoid. For they know that greatness grows at the extremes. Safety, where stability is required. Boldness, where opportunity is greatest. The fourth layer is information asymmetry cultivation. Do not misunderstand. They do not seek insider information in the illegal sense. They seek deeper information, faster information, cleaner information. They build networks with scientists, founders, policymakers, technologists, and macro strategists. They read before dawn and think long after markets close. They consume research the public rarely sees. They ask questions the average investor never imagines. It is not that they are gifted with superior intelligence, they are gifted with superior curiosity. The fifth layer is geopolitical positioning, a dimension few retail investors even consider. These financial celebrities allocate capital according to the gravitational pull of nations rising and declining. They invest in defense technology when geopolitical tensions escalate. They accumulate farmland and water rights when global food systems strain. They acquire energy infrastructure when nations attempt to rewire their grids. They back African fintech when they see demographic booms, and Southeast Asian logistics when supply chains shift away from single-nation dependence. To them, the world map is not geography. It is strategy. The sixth layer is private ownership for compounding. Public markets are loud, emotional, and short-term. Private markets are quiet, patient, and structurally aligned with long-term wealth creation. Financial celebrities place increasing amounts of capital into private equity, venture funds, royalties, IP pools, and foundation-backed research vehicles. They know that true exponential growth happens before a company becomes a household name. Their greatest returns occur long before the public realizes value exists. The seventh layer is exit strategy clarity. Unlike amateurs who obsess over when to buy, these titans obsess over when and how to exit. A well-timed exit can create generational wealth. A mistimed exit can erase decades of brilliance. They exit when narratives shift, when risk overtakes reward, when cycles peak, or when capital must be redeployed toward more fertile ground. Their exits are as strategic as their entries, executed not with emotion, but with discipline sharpened by experience. But, my young student, beneath all of these strategies lies one core principle. They invest in inevitable futures. Not fads, not noise, not virality. They invest where demographic certainty aligns with technological necessity, where policy aligns with economics, where human behavior aligns with long-term value. They do not chase what is popular. They accumulate what is unavoidable. And now comes the question you must answer for yourself. What does inevitability look like to you? For no matter how powerful these financial celebrities appear, The true purpose of studying them is not mimicry, but self-discovery. Their portfolios are reflections of who they are, their temperament, their worldview, their risk tolerance, their philosophy. You, too, must build a portfolio that reflects your inner architecture, not your fear, not your greed, but your purpose. And so, my young apprentice, as this scroll closes, I place into your hands both a challenge and an invitation. Share in the comments the investment theme that resonates most deeply with your intuition. Let your voice strengthen the wisdom of this circle. And if this journey illuminated pathways you had never seen before, subscribe to this channel, where timeless financial insight flows with every lesson, guiding you through storms and into empires yet to be built.